Hi, good morning, everyone. Thank you for attending this morning's webinar for the Cannock Chamber of Commerce, which is part of the Greater Birmingham Chamber of Commerce. My name is Kostas Damianou, and I am the Business Development Manager for the Cannock Chamber. And I can see our president online as well, Martin Jupp. Hi, Martin. Hope you enjoy this morning. Now, just a couple of bits. If you encounter any technical issues, there is a description in the main chat that basically says if you log out, log back in, it usually fixes most of the issues. I also suggest everyone to revisit our events page on our website. There's more events that was loaded up yesterday. You might have missed them. They're all informative, they're all great, and they're all free for everyone to attend as well. So tell as many people as you want that they do exist and get them to join us. Also, we've enabled the question facility from the beginning. So if you want to get your question ready and ask it before the question and answer session towards the end happens, click the question mark to ask the question and the chat icon for anything else if you've got a comment or anything you want to do. And of course, this morning we have Gareth Jones, Head of Commercial Banking West Midlands. We're going to move over to him now, and he's going to talk to us all about banking. Over to you, Gareth. Thank you.
Thank you, Kostas, and thank you to the Chamber for asking me to share some thoughts this morning. You can see Kostas has certainly outdone me on the shirt front, so I'll see what I can do to sort of move that forward. Just good morning to everybody. Thank you all for taking the time to join this morning. I know what incredibly busy times everybody's operating in, and I can certainly say to living and working in these times, I think if I look at my whole career, I can never remember a time with anything like coronavirus really for impacting on sort of how we live, on business and the economy at large. And I guess other than those who haven't been fortunate enough to stay fit and healthy, maybe our key workers, I think the owners of businesses have had more to contend with than anyone else really through this crisis. And overall, I'd say I think business has responded brilliantly to what's been thrown at it, showing great resilience, adaptability, and increasingly innovation. In my role, heading up our teams for Yorkshire and Clydesdale Bank locally, I have the privilege of working with some fantastic businesses, and these businesses, these SMEs, are the lifeblood of our regional economies. And what I've seen many of them do over the recent weeks, I've found really humbling actually, and it's the work that these businesses such as yours are doing that really inspires me, my team, every day to work with these businesses, to do our best to support them, to support businesses like yours, so that we can emerge from this in as strong a position as we can. So this morning I'd like to talk about the impact that we've seen coronavirus have on business, some of the support that's available generally to business, how we've responded as a bank, and some of the things that we've been doing to support our customers, and then we can maybe have a look at sort of as a banker, as a lender, the sort of things that I would look at in terms of looking at sort of new propositions in the current environment. And then we can finish off, as Kostas said, with some questions at the end of the presentation. So just before we move into that sort of body of content, Jess, might be a good time to put the first poll up, and we can get some thoughts from the people on the webinar this morning. So yeah, I just wanted to get a feel here really for if your business had received some type of financial support over the last couple of months due to coronavirus. So if you could just select yes or no and submit your answers, we'll just see what the general view is across the audience this morning. Okay, so from the responses, okay, there's perhaps a third of the audience not responded, but sort of just what 36% sort of have, and sort of 30% haven't, which I think is interesting. You know, so of the respondees, really, pretty much a sort of 50-50 split there in terms of support that people have had or not had. So you know, I think in terms of the amount of support that is available and perhaps the scale of the impact, I think as we move through this crisis, we probably will see that change, and I'd say an increasing amount of businesses probably will take some sort of support, and hopefully this morning we can cover around the range of support that's available and how some of that is accessed. Okay, Jess, if you could just move to the next slide, please. Okay, so the slides we'll actually share after, so you can see some of the detail on it. But what I want to try and share here was some of the journey we've seen over the last couple of months in terms of discussions with customers. And I think a useful starting point in terms of trying to show the scale of the impact of coronavirus on business and the economy is the Bank of England quarterly report that was issued last Thursday. And I think that gives real context of the sort of environment that we're all operating in. And in that report, GDP is forecast, so the output of the country is forecast to be down 14% year on year in 2020, and that actually allows for some recovery later in this year. So with that sharp down 14%, that's then followed by a very sharp up of 15% in 2021. But some comments from the Bank of England around it's probably going to be the second half of 2021 until we get back to levels of output across the country at a pre-COVID type level. Also in the report, there was an indication of inflation at 0.5% this year, just 0.6% during 2021. Clearly, we've seen an impact on the oil price, sort of having a big impact on inflation, but also just general demand around the country for goods and services. Unemployment is forecast to spike close to 10% during the sort of middle part of this year, and then with a gradual reduction back down to about 4% in 2022. Base rates, we will have seen, have gone down to 0.1%, and we've also seen sort of sterling weaken against euro and dollar. So as you can pick up from all that, that's quite a torrid environment really for the economy, and certainly for people operating businesses in that environment, it's clearly very challenging. And I guess the discussions that we've been having with our customers over the last sort of couple of months or so, I see really falling into three phases, as particularly if I look back on that, probably didn't realise it at the time, but the first couple of weeks, perhaps late March time, when lockdown started, social distancing started, lots of frantic activity, sort of businesses, the public at large, really adjusting to our sort of new way of living and working. And I think for business owners, there was a big impact on operations, on staffing, suppliers, customers, how businesses interacted with customers, and really that sort of that activity at that time, there was starting to be a bit of focus around what does this mean for cash. But I think the general view at that time was, this was something clearly we weren't used to. This is probably going to be a pause in terms of where we were, and maybe people had a 3-month type horizon in terms of what their thought process was. And then as we moved into April, there was probably a second phase really of where the discussions have been. So businesses starting to get scaled back, sort of a lot of, I guess, containment. How do I exist through lockdown? And it's probably at that point there was the starting to think around how to access support that's available, that fundings might be available, and really through this lockdown period, how do I minimise my cash burn and sort of just protect my business. And then post Easter, and as we've moved into May, I think there's been a bit of a sort of change in emphasis, and I think it really came apparent during that sort of time that this was going to be a lot more than 3 months. There was a lot more talk around the extended social distancing, and then businesses clearly thinking around, right, what does that mean? What does that mean for my business? Even as recently as the last couple of days, in terms of the indications of some return to sort of work in some sectors being possible. Again, people are looking to adjust, and through that, starting to look forward, I think businesses starting to reflect on what they've learned, on how they can operate a bit differently on a remote basis, some of the benefits that working from home and some of the technology allows. I think businesses have started increasingly to think around the planning for the exit, and I think coming out of the lockdown process is probably going to be sort of tougher, more of a challenge for lots of businesses than actually sort of reducing the business, because that increased growth, that working capital needs to be funded. How are you going to work with your creditors? How you're going to attract new customers? How are you going to operate with social distancing? There is a lot to think about there in terms of that planning for the exit, and really how do we emerge out of this on the other side in as strong a shape as possible as a business. And the last sort of 3 weeks, our discussions certainly have been far more in that space than they had been, as I say, pre-Easter. Thanks, Jess. If you could just sort of go to the next slide, please. Okay, so in this slide, I've tried to summarise the different support that's available to businesses of all sort of shapes, sizes, different sectors, and some of the non-lending support has really been around things like job retention schemes, sick pay, deferring VAT, rate relief, grants available for different sectors. Actually, for self-employed people, some of the changes came a bit later than the initial support that was indicated, particularly through the government. And actually keeping abreast of the level of support that's available and actually sharing it with our customers has been a key thing actually for myself, my team, our relationship managers. And just actually a shout out to the Chamber. I think the Chamber produced an absolutely great document that supports this and summarises the support available. But just to give an indication of how you've got to keep abreast of it to make sure you're getting the latest support, that document is now up to version 12 And Costas was telling me this morning that version 13 will soon be with us, with the sort of changes that we've just had announced over the last couple of days. So if that's not something that you use, I would thoroughly recommend it. And I'm sure the links to that document can be shared after the presentation. On the lending side, there's various schemes, and there's just a couple I want to highlight this morning, which I think are probably most relevant to the audience that we have. So the first one was one of the schemes that the British Business Bank launched on the government's behalf through there's up to 50-60 accredited lenders for this scheme. The coronavirus business interruption loan scheme, so CBILS as it's become known, as its loans up to £5 million, interest free for the first 12 months, 80% government guaranteed. This is available for businesses who are losing revenue or have impacted cash flows due to Covid-19. So a very wide reach, sort of no personal guarantees will be sort of asked for if businesses take up these schemes. And actually for CBILS, the lender completes the credit assessment and the eligibility checks. And actually we've seen the scheme really evolve over the last sort of 9 or 10 weeks. The initial 2 weeks, actually, the terms from the British Business Bank were that banks should look to use normal products if they could, but only access CBILS if there was insufficient security for those products. And actually, you also had to produce a 12-month cash flow. After just a couple of weeks, the sort of insufficient security was done away with, which really expanded the reach of these products. And actually, in recent weeks, we've seen the sort of stipulation from the British Business Bank around the 12-month cash flow go away as well. So as a bank, we've seen real growing demand for these products over the last 9 weeks. We've seen a real acceleration, as I said, through April in terms of discussions, and now I can look at our approval and drawdown levels increasing day on day, actually, across the teams that I look at after, and I know that's replicated not just around the rest of Yorkshire and Clydesdale Bank, but across the banking sector as a whole. So I think it's a scheme that has been successful. There's been a bit of coverage that it was slow at the start, and I think that's fair, actually, in terms of the banks launching the products, everybody sort of really understanding the eligibility, and as I say, some fairly fundamental changes were made to the scheme, but I do think it is having real impact now, and it's getting support where it's needed. The second one I'd highlight is the bounce back loan scheme, and this was announced around about 2 weeks ago, and it was launched by 9 banks last Monday, and 3 more banks have joined since. And this is a loan scheme for smaller businesses, really. Support of £2,000 up to £50,000, and this can be up to 25% of a business's annual turnover. Interest and capital free for the first 12 months. Excuse me. It's a 6-year loan commitment. It's a standard interest rate for every business, for every bank at 2.5%. It's 100% guaranteed by the government. Again, there's no personal guarantees, but as opposed to having credit assessment but by the banks and eligibility checks. This is a self-certification by the businesses that apply. The banks undertake a screening process for them, but don't do a formal credit assessment on these businesses. And these businesses, for ourselves, but I know the banking sort of sector at large, the demand has been absolutely huge for these, in terms of the number of applications totally dwarfs already what has gone through sort of the larger Sybil's scheme. And sort of, you know, ourselves, other banks, applications started last Monday, and money was actually being sort of in customers' accounts during last week. And as I say, day on day, this scheme is getting support very quickly out to businesses who need it. So that's the bounce back loan, which is I guess the newest loan product that's available. Something I wanted to try and give a flavour on is ourselves as a bank, what we've looked to do with our customers over the last 9 weeks or so, and the types of support that we've made available. So I think all banks see themselves really as part of the solution to what we're going through at the moment. I feel that we have a social responsibility to stretch ourselves to the maximum, really, in terms of the support that we can give to personal and business customers. And clearly, in that, we need to continue to balance the needs of our own shareholders as well. But to give a bit of a flavour what we've been through, we've now got nationally 6,000 people working from home. Sort of a relatively small number of those were equipped to do that anyway, but we've had to make a sort of massive change to sort of to make sure that sort of as many people across our business can work safely from home and provide the support we need to give our customers. As I've outlined on the lending front, we've launched some new products in a very short time scale. I think pre sort of COVID, some of those products would have taken a lot longer to go through different committees and get launched. We've also put hubs onto our website for support for different customers, and again, I think they've been launched in a really timely manner. Through to the end of April, we announced some figures in our half-yearly results last week that we supported close to 5,000 businesses with some sort of support in the early days of this crisis. Actually, with activity last week with the British with the bounce back loan scheme, I know that figure's been tripled now, actually, which again gives I think a bit of a flavour for the demand under the bounce back loan scheme. A lot of those discussions are held by local relationship managers, and I know from my own teams that there's been sort of right from the start of lockdown a huge amount of discussion with customers, making customers aware of the advice, the support available, really being a sounding board for the business owners out there. But we've also really wanted to equip our relationship managers to be able to respond as effectively as possible. So we've increased discretions for things like capital repayment holidays, overdraft extensions. We've made a commitment that any lending that we do, whether it's through the government schemes or our usual product for sort of COVID-related lending increases, will be fee-free. And then we've also wanting to equip our sort of managers with simplified processes for renewing existing facilities, and also negotiations around covenants for things like receipt of financial information, or businesses that are seeing some financial pressure impacting on their current lending agreements. On the personal banking side, nationally we've done sort of 60,000 mortgage capital repayment holidays, 40,000 sort of repayment holidays for personal lending products, including credit cards, and also launched Money on Your Mind digital advice service, via our website and social media channels. And I suppose just for wider society, we've committed 850,000 to local charities through the Virgin Money Foundation, and also the Virgin Money giving platform. The fees usually associated with that for charities have been waived during this coronavirus period. Okay, Jess, just before we come to the sort of the final bit of information I wanted to share, it could be a good time to do the second poll. So yeah, I was just interested really for the business owner there on sort of how long you think it'll be for your trading to sort of fully recover to the pre-COVID levels. So if you could just have a think and have a look at one of those categories and select the one that you think's most appropriate. Okay, so it looks as though we've only had a couple of responses out of the delegates, and in the 3 to 6 months category. And I think across the sort of whole of business, actually it does seem to show that 7. I'm not sure if there's something in the summary there, Jess. Are there some results in the lower? It seems to indicate 7 people have responded. I'm not sure if there's any responses in the 6 to 12 months or the 12 months and longer. But certainly, if you link to that Bank of England type outlook, as I said, the economy at large, Bank of England is predicting sort of not through till sort of the latter part of 2021 for that full recovery. So thanks, Jess. If you could just move to the next slide. Thank you. And I guess something I wanted to just give a bit of a flavour on this morning would be around how we approach sort of loan assessments, and I guess the starting point in that is very much we're taking the view that a strong business pre-COVID will return to being a strong business, and we're really trying to sort of work with businesses to assess the impact that COVID's had on their business. We try and make sure that everybody has accessed the support that's available. Some of the things that I talked around, whether it's job retention scheme, deferring VAT, and just making sure, as I say, that they're sort of maximising utilisation. We talk a lot around sort of recovery plans. Some things I alluded to earlier around sort of operations, staffing, sort of what supply will look like, what demand will look like, and that leads, I guess, particularly with some of our larger requests for finance around doing some scenario planning around sort of, what if social distancing is extended further? sort of what if the sort of lockdown is extended, or there's a sort of there's a second spike that in terms of infection rates, etc. And we'll use those scenarios just to sort of test viability for the lending proposals that we have. But the key thing that hasn't changed from previously is the biggest factor we look at really in a lending proposal is the quality of the management team. And we see time and time again, regardless of sector, regardless of what's happening in the economy, that the businesses with the strongest management are the ones that adjust to different situations, and businesses really continue to perform sort of, I guess, strongly, whatever's thrown at them. So really understanding the management teams that we're working with, knowing their sort of backgrounds, knowing their strengths is an absolute sort of key part of the assessment, and certainly as important as any numbers are in that assessment. So thank you all for listening. I hope you found that useful. As I said at the start, we're operating in some truly extraordinary times, but I think business is resilient, and we're really seeing that. And I do believe that if we all work together, we will emerge from this, and we will continue to grow really successful businesses that, as I say, make a real difference to the regional economies that we all live and work in. So, Jess, I know there's a slide around the questions. If we can just move to that, and Costas, maybe I could sort of hand back to you, and you can open up the lines to take questions.
Yeah, thank you. I'm back. Sir, I couldn't help you there with your question about 3 to 6 months and stuff. I got kicked out from my broadband and I couldn't log on again. Must have the gremlins this morning. Now, that was very informative. Thank you very much for that. We do already have a question from Martin, which we'll ask in a second, but I do have one for you as well. So, from what you have seen over the last 2 months, what do you think is essential for business owners to actually do?
Costa, there's probably a couple of things that stand out for me. As I think sort of running businesses can be pretty lonely, actually. So I would say reach out as much as possible, whether that's your bankers, your accountants, people like the chamber. Let's make sure everybody's maximising the support that's available. And I think the more people you reach out to, you'll tap into their networks and their experiences of what they're seeing different businesses doing at the present time. So yeah, there's reaching out, and the second point would be the point I was trying to talk about, sort of looking forward and really trying to have a think of as we come out of this lockdown period. So what are we going to need to do to really move this business forward, and what's the impact going to be on suppliers, customers, operations? So I think the exit and the recovery can be as challenging actually as actually being in it. So really keep looking forward. It's hard when you're in the middle of it, day on day, in the middle of all the muck and the bullets flying at the moment. But I think we've just got to keep planning for the future.
Excellent. Well, thank you very much. We'll move on to Martin's question. But if anyone else does want to post a question, please don't hesitate to type it by clicking the chat box. The question mark, and then you can post the question. So Martin has asked, lengthy, but it's a very good question. He goes, "Hi Gareth, I originally applied for a Sybil's loan with Yorkshire around 2 weeks ago, and then last Wednesday I thought the bounce back loan is more appropriate for my business and applied for that. To date, I haven't had any contact other than acknowledgement of the application. Has applying for the bounce back loan post applying for the Sybil's loan affected the speed of acceptance?"
No, that you shouldn't do. They're independent. We've got a database that we're making sure that there isn't a duplication. Certainly, the level of sort of demand for the products, as I outlined, has been absolutely huge. I know our teams were working right over the weekend in terms of progressing some of the applications from last week. If Martin contacts me afterwards with the sort of specifics of the customer, I can find out where that is in on the process. But certainly, if there was an application on Wednesday, I know a number of businesses that applied middle of last week were getting their funds certainly yesterday. So I expect Martin to hear something very quickly. But I am happy to pick up the sort of individual case. We know there were a number of cases that hadn't gone through sort of seamlessly because something in the application had flagged up something that needed to be a refer, but all those customers had a message yesterday to say that that there was some additional information required and somebody would be in touch. So as I say, generally money is being released and the rate of that is increasing sort of day on day. So it should be very soon. But if there's a particular need Martin needs to discuss with me, please reach out.
Fantastic. Well, thank you very much, Gareth. We do have a question from Lon Waters, and the question is: I have been running my business for 5 years with steadily growing revenues. I have not needed a loan before, so I'm a little unsighted as to what kind of repayments a 25 or 50,000 loan would demand.
Okay, so as I say, the Sybil's, the bounce back loan scheme. So this sort of 25 to 50 would fit in the bounce back loan scheme. That would be over sort of over 6 years. The first year actually is interest and capital free, so there wouldn't be any sort of repayments on that. And then with interest rate at sort of 2.5%. I haven't got a calculator sort of with me at the moment, but say if it was 50,000 over the remaining 5 years, you'd be paying sort of 10,000 a year off in sort of in the capital, and then the interest rate would be on sort of 2.5% of the 50,000. So look, you could basically look at 50,000 there over the 5 years. It's going to be something around £1,000 a month after the first 12 months.
Right, fantastic. Okay, now something's just occurred to me as well. Is there's going to have businesses out there that they've been ticking along nicely until this COVID scenario, and then all their business and work has stopped, and they're going to look to sort of try and find some money via a loan of some sort. However, they might have a really poor credit rating. What do they do? Because you did mention something about a self-assessment loan, but surely someone with really bad credit will be affected in being able to be eligible for any of this.
Yeah, the bounce back loan scheme is available to all businesses unless there is express sort of financial difficulty. So actually, if the business has been ticking along, as long as there isn't anything really detrimental in the credit history, such as
Like
a current
BCJs
bankruptcy or something like that, the application goes into a bit of detail around that self-certification. That you have to self-certify that you're not in sort of financial difficulty, and then if you open the link, it outlines exactly what financial difficulty is, and then part of the checks that the banks will do is on the sort of British Business Bank's behalf is some sort of credit check, just to sort of just to verify that. But we're seeing lots of businesses borrowing for the first time during the bounce back, through the bounce back loans. So the fact that a business hasn't borrowed before and hasn't built up that credit history that you sometimes do, a bit like on your personal accounts, that actually if you've borrowed a bit, that improves your credit history, that won't impact on these bounce back loan schemes. So there's a very small percentage which get taken out through financial difficulty, but we're seeing that this scheme is open. It is open to all, really.
That's nice. So it is actually pretty flexible, because it is a bit worrying, especially it never occurred to me that people that haven't borrowed before, who have always paid things on time, they don't really build up a strong credit history, when they probably the people that will be able to repay easily.
Yeah, no, I think this is better that I was saying on some of the larger loans that, where we're looking at the credit assessment, that bit around what did trading look like pre-COVID. We really take the belief that these businesses will get back to those levels, and if it was a strong business before that could operate debt free, the likelihood is that business will get back into that shape in the future.
Excellent. Is there any other questions? Are we going to come to a close? I can't see anyone typing anything at the moment, but thank you very much, Gareth. I don't know if you had any final thoughts or anything you might want to just point out, just in case a last question does come.
No, I'd just like to thank everyone for their interaction. Thank you for the questions. Thanks for taking the time to listen. And I just want to wish everybody out there running businesses every success. I'd really admire what you're doing. You're operating in a really challenging sort of environment, and let's make sure you reach out to all the people that can help you.
Excellent. Well, thank you very much, and thank you for everyone for attending this morning as well. And don't hesitate to go onto our events page as well to see what other webinars we have going on. And we'll see you shortly. Thank you, Gareth, and you have a great day. Bye, everyone.
All right, thanks.